Welcome to Property and Paper Live. This is Dawn Rickabaugh. I'm your host, and we're here to talk about anything about owner financing and notes. This is the place where we connect real estate and note investing with the techniques of owner financing. And usually they connect in a lot more ways than most people think. You can always find me over at notequeen.com, and I do have a link tree, linktr.ee/Dawn Rickabaugh, where you can find really quick links. And you might want to go check out my YouTube channel as well. Anyway, welcome. I have my own ideas. Probably a lot of you already know what my ideas are about things. But I kind of wanted people to open up and tell me what you're seeing out there in the market. I'm all in on real estate and note investing, provided I get, of course, goes without saying, but the price and terms that I want. And I'm really interested in buying property with owner financing. There's an implied note transaction with that, actually 2 note transactions. And I'm also really a fan of partials because it's very conservative positioning for whatever happens in the market. Here in our local area, I would say I've seen price reductions be quite increasing, but in our area here in Northwest Reno, I would say that we have a Northwest Nevada, relatively stable real estate market, whereas other places, they're falling by quite a lot. Condo markets are crashing in some areas and things like that. So if you guys can unmute, what are you guys seeing out there in your markets? What are you positioning in terms of real estate and note investing? And I just want to see what you guys are seeing out there. How you doing, Alex? What's going on?
Okay, I actually just submitted an LOI yesterday to buy 3 properties,
Nice.
but
Tell me about
not
it.
there's no owner financing. I'm doing a DSCR loan, but these are I'm basically going to turn these into 3 4-family homes. And when I do that, then I'm going to turn around and try to sell them, and then I'll do my own owner financing, if that makes sense.
Gotcha. So you're getting conventional financing based on the debt coverage ratio.
Right.
Fantastic. So what kind of bank loan, what kind of rate and terms are you going to have to pay?
I find it hard to believe. I actually became a broker for this company because I'm so impressed with them.
Oh,
But
really?
they're giving me 5%. It's a non-recourse. Yeah, that was my reaction, and only 1 point. And I can't match that anywhere. No, I'm still waiting for the paperwork to come through. So this all could be, just hocus pocus right now.
Mm-hmm.
But when I get the paperwork, I'll see. But he wants to. It's a family office, by the way. So they want to do everything, including the 4 families, and a business comes along with this as well. It's a pretty large business, so I've been a little busy.
Yeah, sounds like it. Well, that's exciting. Is it sort of like a blanket loan and you have release clauses for certain parts?
Well, I
Because
haven't seen the paperwork yet,
yeah,
but
because how are you
that
going to owner finance pieces while that other loan is still there?
oh no, I'll pay that off.
Oh, I see. Gotcha.
Yeah, that's the plan. We'll see what happens. But I'm doing it's surrounded actually. It's in a Metro New Jersey area, and it's surrounded by across the street. There's a 20-unit apartment building. Up the block, there's like I think a 15-unit building. So these are single-family homes and that are commercially zoned. So I don't think I'm going to have an issue. And I'm doing the 4-family just because it's easier to finance and then easier to sell as well. So when I go to sell, I might sell off one property to pay off the other, and then I could do the owner financing.
Gotcha. So then you're just wanting to position yourself for long-term cash flow.
You got it. Yeah, and if
Oh,
not, I'll have what, 12 units that are brand new that will, rent. I don't think it will be an issue. So, and if you recall, I basically do traveling nurses.
mm-hmm.
And it's not too far from a couple of hospitals. So
I forget what area are you in?
I'm in Jersey. Can't you tell by my accent? I'm in northern Jersey, not too far from New York City.
Okay, got you. Yeah, so this company are they the builders that are giving
No,
you
I'll
this
be the
loan?
builder. I'll be the
Oh,
builder.
you'll be the builder.
Yeah.
Okay, I got it.
Yeah. So right now, all the rents cover everything for the DSCR, and the business that comes along with this actually uses the property to run their business, and they don't pay any rent. And they're over $1 million a year in income. So that's the first thing I'm going to do is put rent in there from the company. Then we'll
Yeah.
see.
Well, good. So you're running and going. So good for you. In general, what are you seeing in your real estate market? Are things stable, up, down?
Things have slowed down as far as sales. I mean, inventory is still very low, but because I'm, in this area and there's so much money around here that it's almost like California, that
Yeah.
the prices just are not dropping. My ex-son-in-law has been doing some work on flipping homes, and one of the things we've been doing is the prices are just stupid, and it doesn't make any sense to me. But they're selling. There's bidding wars, so not much has changed.
Interesting. Well, thanks for that. Appreciate that. Does anyone else want to pipe in and tell me what you're seeing, what you're focused on?
Hey, Dawn.
Yeah.
This is Aileen. I talked with you a couple months ago and I emailed you. I don't not necessarily have too much opinion on the market. I have a scenario, though,
Okay.
for my sister. If you want to do
Right.
that, do you remember? Yeah, anyway.
Yeah.
I called a few months ago and I had zero information for you. I couldn't answer any of your
Oh,
questions,
yeah,
but I've
yeah.
talked to her
Yeah.
now.
Fun. Yeah, I remember that now. Sure. She had really had a tough time with the fires in Altadena, and
Yeah.
then it was it Santa Barbara or somewhere where she's got the
Ojai, yeah.
Ojai,
Ojai,
okay.
just a little bit south of Santa Barbara, right? Yeah, she lost her home in the fire, so she's kind of struggling. She needs to live down here in the LA area for work. But she's got this rental in Ojai, and they've just really been struggling with getting it rented up properly. I mean, it's been rented out to people, but they can't make the rent. So the rental rates on the property are much higher than what they're actually able to get. And so now I kind of was trying to convince her that maybe she could sell it because the mortgage is quite a bit lower than the value right now. But I said I would call you and ask you what your thoughts were on the situation.
Yeah, I'm a little rusty. Can you just give me the walnut-sized reminder of what? So basically, we're only just focusing on this Ojai rental. You're saying that she can't get the rent she needs to cover everything, PITI.
Well, she can just barely get that to cover the PITI.
Okay.
But at this point, there's no income in it, and so there. Well, here I'll just give you the stats real fast.
Okay. Yeah.
So the value of the house right now is about $675. They bought it for around $200 in 2012. But they still have about $200 owed on it. The interest rate's around 3%. They're renting the taxes and insurance is another $700 a month because fire insurance just went way up.
Yeah.
So now all in they're looking at about $2,500 a month just to hold it. They just rented it out in January for $3,200 a month, but that guy can't now make the rent. And the market value for rents up there is supposed to be around $3,800, but they just can't get people in for that amount of money. So it looks like it's a 1,200 square feet. It looks like the guy that's in there right now has offered to buy it and says he'll bring cash, but they haven't. That was just the other day, so they don't know what that looks like. But I thought, well, if there's only $200,000 owed on it and the value is up at, 675, 700, then that sounds like a good idea for if he could bring enough cash to cover the down, right, or to cover the mortgage. Then as a down, and then they could finance out the rest, owner finance the rest. That would be better. They've just had a lot of horror stories with evictions and things like that, and I told them foreclosures would be maybe better. I don't know. That's what I'm trying to ask. They were to sell it to this guy, what that could look like.
Okay, so let me get this right. In January he signed a lease agreement for $3,200, and now he can't pay that, but he wants to buy the house cash.
The one person signed the lease, and another person who was subletting from him or something has now offered to buy. But that guy, they're not sure of either. But they figured it just kind of opened up their eyes about this idea of maybe trying to owner finance, sell it instead of keep continuing to rent it.
Right. Okay. Well, fantastic. So, what are your main questions for your sister?
I guess how would you structure something like that?
Yeah, well, if
Uh,
you were saying, I like your idea. That is very, very secure. They could bring a down payment equal to pay off the existing first. That's huge, right? What is that?
right.
35% down or something, or 30% down? So that would be good underwriting, provided you do the other due diligence on the person as well. You're just going to want to see their net worth, going to, their ability to pay, credit score, things like that. But it would be unless he's going, well, we'll pay cash for the house if we can get it for 500 grand, I don't know what they mean by that, but yeah, that would be a really solid underwriting from what I can tell, just from what you're saying. Because then let's just, let me pull up my calculator. Yeah, so anyway, so you're saying 675 is fair market value. So let's take 675, and if they're able to at least pay off the underlying so that your sister can be in first position as an owner carryback.
Right.
Right? So
Yeah.
we know that there's closing costs and other things, but let's keep it simple. So the loan, your sister would have a first loan, 475, and it just depends on what they can and will afford. Like if 3,200, I'm going to just put that number in because ostensibly they used to be able to afford that. Well, let's just put in the typical 360, even though we can do anything in owner financing, right? So basically, even if she charged, is this the going rate, 7% in the market for jumbos? What's the going rate in institutional? Anyone?
I think 6 to 7%. I think that's probably right.
Okay, so anyway, let's just say they agreed on fair market value. They could put down 200,000, which is phenomenal. That's great protective equity, hard cash down payment. I would be interested, where did that come from? Because sometimes, guys, one time I did, it wasn't a loan. I bought a note where the people put down, the property was worth 170,000. This was back east somewhere, and they put down 100,000, and there was a $70,000 note that I bought for 40,000, and I'm like, how can I lose? I didn't do the due diligence. This is and figure out where did that 100,000 come. So once it went bad, once the note started being non-performing instead of performing, I realized the 100,000 came from a random lottery winnings, and they had no financial prowess or just
Yeah.
throw that out there, that it's nice to know that it hurts. It would be hurt them to lose instead of like, easy come, easy go or whatever. But still, if someone puts a big enough down payment, which this would be, especially for owner occupied, a lot of bad things would have to happen in their lives, the buyer lives, and in the market in general before your sister would lose money. So what you want to know is if it pays, she's happy. If it doesn't pay, she's happy, because she's going to be ahead of it, foreclose on it and then sell it again for more.
Can you tell me kind of the primary, what are the risks involved in the foreclosure process? I think because they're so burned by having to evict people in the past, and they had another property a few years ago, that they're very afraid of that idea, right? The idea of how hard is it to get someone out when they stop paying. Is foreclosure any easier? It's California, I know, so we're different, but.
Well, there's a process. It's not, you can't even file an NOD for 120 days late, I think. But if you put everything together properly, which we would do together, where you dot your I's and cross your T's, even though she wouldn't be, we would pretend she's a loan originator and has to qualify everything. We'd do the whole package and you'd have it serviced by a licensed servicer. And so you would be able to foreclose. But the thing is, with tenants and eviction, they have a security deposit at risk. That's about it, right? So if someone's got 200,000 that they've put down they've got a lot of skin in the game. So you really decrease the likelihood of default. So what you want to do is statistically stack it. So, and there's a reason that conventional loans are typically 20%, right? Because at that point, the statistical likelihood of default drops off dramatically. Okay, so that's the biggest thing, unless they have additional collateral also that they're willing to pledge. That's so much the better, right? Let's say they own another property with significant equity. You can have a blanket mortgage. They can pledge more collateral if they don't have as much cash too. So there's lots of ways to do it, but I would say where she's at now seems like a high risk of hassle and no cash flow.
Well, that's exactly right. Okay,
and so I think trading a potential owner carry like we're imagining would be much less risky than what she's dealing with now in a lot of ways. So it just depends. I mean, if she takes 10,000 down, no, that's worse.
Right. But if it's going to cover the mortgage, And then as far as the taxes go, if they've taken depreciation for the last 10 years, if she sells it, does she have to pay all that depreciation?
It's a little beyond my pay grade to really give advice on that because there's different situations and CPAs handle things differently with different clients I've seen. But yes, generally there's depreciation, recapture, and other things. But she doesn't have to pay all of her capital gains unless she has a very interesting CPA. Right. So basically, instead of her barely breaking even and having all this headache, she could be getting, so right here we see that she should be netting $31.60 a month, right?
Mm-hmm. Right.
Okay, and even if they go, well, we're not going to pay that. Why would we pay that? We're not going to pay $675 if we have to pay $7. And okay, we'll sit. Will you pay $675 if we give you 6%, right? Now with their PITI, this is going to be what market rent? 3,800, I don't know, 3,600. Anyway, you can just see it's price and terms, right? Or you're willing to take a lower price if you can get the higher interest rate, right? Because then the capital gains are lower.
Right. So they can just
but the interest is higher. So maybe you say, oh, we'll sell it to you for $625. Minus the 200,000. So you just have to run the different scenarios with the CPA to say, if we do this, what would be the outcome if we do this, and just know ahead of time. And so maybe if they get a $50,000 discount on the property, maybe they'll even pay normal, rate because they don't have to do the regular qualifying. But you can see that going from no cash flow at all and a lot of risk hanging out there in the market, she could take profits off the table right now, as long as she does it intelligently with an eye to the what ifs down the road. Then she's ahead $25,000 a year. What is this? $30,000 a year?
Yeah.
No property taxes, no insurance, no maintenance and repairs. So it could it could be a very good thing if underwritten properly. Underwriting, of course, is the assessing the risk involved with any sort of loan. Banks have all sorts of underwriting departments, and someone like me is like an underwriting department for the average mom and pop who doesn't realize they need an underwriter, and they have no idea that there's a secondary market for notes. So that's another thing. If she's got a note like this, and let's she next year something happens, she needs a new car, she has medical expenses, and she needs to pull up some cash without discounting these future payments for her retirement. She could sell off. Let's just say she needed to raise 50 grand for some reason. Let's just, for kicks and giggles, see what she'd have to give up. I mean, I'm just gonna throw in 12 just because it's a average number. So she'd only have to give up probably a couple years worth of payments, all said and done. Just the shorter the term, the shorter the term, the higher the interest rate she's got to give up. But, if she wanted to sell 60 payments, she could get this and still have most of the balance of her note left, right?
Yeah, see, that's the kind of stuff she doesn't even, I wouldn't even think of that, but yeah, right,
Yeah,
right.
you don't need to complicate it with this. I'm just letting you know that when people have a note, they're like, well, what if I need cash? Maybe I should just sell the property now. And maybe she just should. She should just look at with the accountant, what happens if I sell it right now for cash and just get rid of this headache? Number two, what if I take 200,000 down at this price? What if I take, this price at this interest rate, and just run the numbers. So the main thing is not to be blindsided down the road. There's nothing that's right or wrong to do. It's just what meets people's objectives and is a good fit for risk and reward. A 30-year note, like we've just discussed, is not for selling, it's for keeping. Because if she tried to sell that whole note, I guarantee you she'd take 50 cents on the dollar, right? Because,
okay.
right? So if she's going to think of needing cash, she's just going to sell it outright right now while the market's still strong. And, who knows? Are we going to have earthquakes? Are we going to, what else? There's all sorts of things can happen that are beyond our calculator, Yeah. So, and then what if I would lose out on this? How painful is that? If I miss some upside, how painful is that? Scale of 1 to 10. If things drop and I lose 100,000, 200,000 in value, how painful is that? And then decide.
Yeah,
because
it's all pretty painful right now.
Yeah. So, but I'm just
in this holding pattern.
Yeah, and it's hard to move because you can listen to all the smart people in the world right now, and at the end of the day, I don't know that any of us really know what's going on. I know big changes are afoot. I think, once in a century resets and changes to our financial system are coming. There's a whole host of other things that could happen. So it can be, deer in the headlights, like freezing up. Like, what do I do? Everything feels scary.
Yeah.
Everything feels big. Makes sense.
Thank you very, very, very much. I appreciate it.
This
is really helpful.
Okay, yeah. So good. I'm really glad to hear from you. My heart was going out to your sister, and I so much appreciated your sweet email. That really sunk in deep. So I appreciate you.
Oh, good. Well, thank you. I appreciate you very much too. This is really, really helpful, and it's just coming at the right time. I guess it's taken this long for me to focus, but it's been great. Thank you.
Oh, yeah.
Thank you very much.
All right. Take care, Eileen. Fantastic. Amen. Hi. Massachusetts, a tenant-friendly state. If I were to sell a house with owner financing and carry back a note, if the buyer defaults in payment after some time, is there a way to get the house back quickly without going through foreclosure? No, you can't. If you try to have people waive their right to due process, it usually can end up very badly for you. So I would say don't try to get around due process. Is it a foreclosure, judicial state, court foreclosure, judicial foreclosure process?
It kind of says both. I'm not clear. It says judicial and also non-judicial. So.
The whole point is, yes, you're going to have to go through foreclosure. That's the ultimate remedy. If you can't get them to cure, sell the property, do a deed in lieu. Yes, you're just like what banks have to do. That's what you have to do. And I want to see.
Here in Massachusetts, the foreclosure process takes about 3 years.
Okay, so that's like New York and New Jersey.
Is there anything I can do to shorten the process?
If none of your loss mitigation efforts work, like I said, a workout, a forbearance agreement, get them to sell, give them cash for keys. If they want to stay there on your dime while you pay property taxes and insurance, they can. That's why I don't particularly like buying notes in those states. Unless I get like a super screaming deal where, okay, doesn't matter. They can destroy the property on the way out and I'll still be all right. I mean, there's plenty of people buying notes in those states, but I don't do.
Hey, Don, good morning.
Hey,
It's
good
Clarissa.
morning, Clarissa.
I was just gonna say in that situation, the person who just spoke, I would say whatever you're thinking of doing, just try it right away. Like, don't keep waiting. Because if you end up having to do foreclosure and it is going to take 3 years, just get started now. Like, do exactly what you need to do that the law allows you to do. Serve them their notices and, have the conversations. Even if you think you're going to work it out, still follow the legal process right now. That's what I would do.
Yep, that's a very good point. And usually having an active legal lis pendens going on is great motivation for them to do something, a loss mitigation thing. Or a lot of times people just sit, and we'll get back to Amin if you had some more questions you wanted to follow up with, but there was a perfect example. 3-4 weeks ago, someone brought me this situation where I guess there was a group of people, they were getting money from lots of very novice investors, and nobody did their due diligence. They're just like, money has to fly fast. It's got to be now. So now there's like these people, these novice investors who were not taken advantage of. They didn't do their due diligence. Like, nobody's a victim. Like, you do have to put your big pennies on when you're going to invest, right? So you need to learn about the asset you're investing in, whether it's real estate or notes. And they end up with the property or a non-performing note, and they're so embarrassed and so overwhelmed that it's been 1.5 years and they haven't done anything. Nothing. They just buried their head in the sand. Who knows? The person was supposed to fix it up and resell it, and everyone's going to make a lot of money. And then they took the money and disappeared. So yeah, it was like an 18 months. I don't think she'd even gotten a deed of lieu. She hadn't even taken any efforts to get the property back. She's non-performing note, just sitting there. At some point, I guess property taxes will take it. But sometimes we can get overwhelmed, like, or feel so ashamed. Oh, I should have known better. I don't want anyone to know that I did this stupid thing. And anyway, in that case, my offer to them was like, well, I'll come in and take a partial and fix it and take a fair profit off of it and leave you with the rest, and you have something instead of zero. You can lose your $150,000, or, you can have me work it out for you and then give it back to you when it's all better.
Would you recommend that if I'm focused on buying houses and selling them with owner financing and then holding the note, would you recommend focusing on landlord-friendly states?
Well, that's always helpful. Depending on landlord-friendly, do you mean borrower or lender-friendly states?
I meant states where I can take back the house without going through the courts.
Yeah, there's a lot of investors that will not do judicial foreclosure. They stick to deed of trust states that have a very set pathway to foreclosure. And then you have to also watch for those that have statutory redemption things where, okay, even if you foreclose, they could come in and redeem the property, 6 months, sometimes even 12, I forget. It's like, that's kind of it. But are you talking to Amin about coming in all cash?
Yeah, that's what and I kind of like, I'm doing some research and I find some places where I can buy houses for $50,000 and then sell it with owner financing. There are places like that, thinking maybe that's a good strategy for me. Low cost houses, buy it for cash and then sell it with owner financing.
Yeah, that's a very popular model. There's quite a few people doing that. There's also a guy doing, I forget his name, but the slow flip guy. Have you guys heard of him? He's talking about owner financing, basically borrows money to pay for the houses, if I'm understanding correctly. And because of the price points, people can afford enough of a payment that even if you borrowed the whole $50,000 to buy the property, after it only takes you 5 to 12 years or something to pay off the underlying investor, and then you've got this free and clear cash flowing property. But yes, that is a huge model that a lot of people do. In fact, I bought a portfolio of notes from a guy, partials, doing just that. He was buying HUD houses for 30, 40, 50,000, not even touching them, and then selling them for double. The problem was he was only taking small down payments. And so I would say a good 30 to 40% of those had trouble. The other thing you have to just be aware of in the back of your mind is that after you do a certain number, you're considered a loan originator. So whatever state you're dealing in, 50 state foreclosure laws, Zaya put in the chat. Thank you, Zaya. You just have to be aware of the regulatory landscape in whatever state, because if you're considered, you'd have to qualify, follow certain things that we've talked about before, where you get I don't know if you've heard that, if we've talked about it directly, but I did that class with Sadhna of Madison Mortgage. Anyway, they're licensed loan servicers and lenders in many states. But you get an underwriter to do the file so that you're compliant as if, you're a big time lender. So usually it's 3 properties, 5 properties, there's some sort of cutoff. But I always like to pretend, just for safekeeping, that I do more than I have to sometimes, just because I never want to be in front of a judge and make it look like I did, fraudulent or predatory lending. But yes, that's very popular if you buy yourself. In my area, I can't buy properties for cash low enough where the numbers make sense. So that's why I like buying properties with owner financing. I can't get them as often as I would like, but boy, that's my buy properties who have a lot of equity. I can do subject to, it's not I just don't like that. There's a lot of complexity with it, but not that I wouldn't do it in the right situation. But I like the free and clear properties where the owner will carry for at least 5 years. And I like buying front end partials from other people who have carried paper. That's my 2 favorite things, because then the money's already there. The decentralized hedge fund that's lending at 3%, 4%, and 5%, like these owners will sometimes zero. I have never gotten a 0% loan, mostly because I don't ask for them, but I'm not opposed to starting to ask for them. But anyway, in the meantime, that means if I'm looking for properties and I get somebody where it makes sense, sometimes I just wholesale them. I didn't get my owner financing, but at least the wholesale fees or the fix and flip fees can pay for my marketing while I'm really mining for those gold nuggets.
Thank you.
Yeah, sure thing, I'm in. You need to schedule a call.
We'll do that.
We haven't chatted in a while. Well, I think I'll just let you go then. We all got lots to do. I'm so happy to see the smiling faces that I can see. I appreciate you. Now go out there and create financial solutions, just one mom and pop to another. Take care, everyone. Bye-bye.